In this video, we are going to be analysing Antero Resources, ticker AR. If you want your own stock analysed, throw that in the comments. We'll get around to it when we can. Now, to get straight into it, firstly, from an intraday perspective, we can see this is the 2-day VWAP. This is the normal kind of VWAP everyone uses, the 1-day VWAP. Now what we can see is we are above both of these. What you consider this, when you're above that range, you consider this quite bullish. So again, even if we do get a pullback to this level, as long as we can kind of hold that 2-day VWAP, so around $21, we could definitely be looking at some upside potential. But what are going to be the key levels, more the swing bias levels, investment levels that we could be paying attention to? And one thing I want to note before we even go through the levels, pay attention to the shorter and longer term trend on this stock. The 6 month, so this left chart is a 6 month, the right chart is a 1 year. 6 month, strong downtrend. 1 year, strong downtrend. Now, when I see this, I don't actually like to buy these stocks. Instead, I only tend to look at them short bias. And the reason for that is if we can trade in the direction of the short and long term trend, usually our success is going to be, or our win rate and success rate is going to be a lot higher. So, considering we're currently now around $21, what are going to be those key targets? So again, we'll go over the resistance first because I think that's what's going to be a lot more key. So if we do move to the upside, and again, when we talk about these levels, there's no guarantee that we come up all this way because that does require a bit of a bullish momentum move. But it means if we do come to these levels, this is areas where if I'm long, I'm taking profits. But really, kind of usually more when I will use them is this is where to kind of join that downward trend at a really good level, and then you can have a relatively tight stop on a move like that, or again just going with a strategy with defined risks, so then you don't even need to really manage it. So $25.80, $28. So these are going to be the first deviations between the 6 month and the 1 year. This is now a key resistance. So if we can push up, we need to go up about 4 or 5 points to get into this range. Again, this is when I would be looking at it short bias and potentially shorting AR and kind of going to continue that downward move. And where would be my target if we call that short bias? Usually I look to trade to statistical mean, which is going to be right kind of where we are now. This is where we are right now is fair value. And that's around $21.40 and $20.25. So that range is considered fair value. Fair value on the stock, especially if we're traders, I don't like using this level. The only way I use this level is as a target. So if I was shorting, that's my target. But I will never look to really buy or trade off of this level. Now, from an investment standpoint, this level will be used a bit differently. So if you're looking at investing in a stock like this, buying at this value or below is really where you want to be looking to buy this. When you're buying above this value, you're really kind of paying a premium, and 9 times out of 10 you'll get that pullback anyway back to this level, so it can pay just to be a bit more patient if you're looking to invest. So now we covered statistical mean, we covered our first deviations. Now what happens if we end up breaking these first deviations, whether that's on a catalyst or just we got some good strong momentum to the upside? Doesn't really change still the shorter and longer term trend, which is still a strong downtrend. So coming into $31.30, $35, this would be my next range of resistances. So again, if I'm looking to trade the stock, for me being a reversal trader, I'm looking to be short bias on that stock. If you're a trend trader, then again, potentially using that as a target. And to go over the final two resistances, we have $36 and $41. These are our third deviations. This will always be basically our final target if we're long bias. But again, if we're a reversal trader, this is usually where I'll take I'll start the trade because this is the highest probability level of success, or at least where I will get in with the majority, if not all of my size at this level. Because again, this I don't expect price to really move past that level. And even if it does, it most likely will be short-lived. So those are the key resistances. To quickly cut to the supports, we have just under $15, so around $14.70. That's our first deviation between the 6 month and the 1 year. They're basically the exact same level. And if we break that, we have $9, $20, and $8. Now, on a stock like this, again, I'd always be cautious but even buying at these lows unless you've done your due diligence. You're looking at it maybe from an investment standpoint. Not something I'll look to do a reversal trade, because if the 6 month is downtrending, the 1 year is downtrending, that likelihood of a bounce is a lot less. So to me, I will not be trading that downward move. And I think the problem as well is these levels will change quite rapidly, especially to the downside, because of how strong it's downtrending. you will see that probably even go 2 weeks out, this 1470 will no longer be that first deviation. It will probably move down to 1450, maybe $14, depending on how weak the momentum is. So that's why I don't like buying these stocks at the downside, and instead I will look only to the upside move. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.